Winnie has already gotten the name. So Winnie should be able to send us their number. We give them what here? A present. Winnie, are you able to send me your number there right away? I give you my present. That is a promise. That's a promise. We must keep promises. People know my name on Facebook, Joshua Aura ACCA Mentor. So if you know my name on Facebook like that and you're able to search me, and then of course you are able to get that link there, and then you get to share, then automatically again, I'll be able to give you a present. If you're able to share that to like 10 groups, I'll be able to give you a present, a good present for that matter, bigger than what I'll give in this case here, Winnie. Bigger than what I'll give Winnie. So Winnie is a lady, I should give Winnie some good present. Some good present. I only give ladies good presents. What about men? I also give men good presents, but you see men, hatuna mahitaji mengi sana kama ladies, isn't it? Kusema tu kweli, si kwa ubaya. Wewe ukiwa na kijana na msichana na mvulana kama watoto wako, ukienda kuwafanyia shopping ya high school, unawafanyanga the same. M-Pesa is unable to process your request. We apologize for any inconvenience. Please try again later. So we'll try it later. I think there is a problem with M-Pesa nowadays. Uwezo wafanyia shopping the same. Kijana unampatia in this case vitu kidogo kidogo namna hiyo. Hiyo ni maisha. Si kwa ubaya. I'm trying to be a all right. So ladies and gentlemen, what have we said? If you go to Facebook and I'm live there, you'll be able to see Joshua Aura ACCA Mentor. So pick that video and share it in 10 different groups, like these accounting groups, like accountants on Facebook. We have Kasneb Kenya. You share it there, and then of course you screenshot them. Share those with me on WhatsApp on our wall, and I'll be able to give you 1,000 bob. 1,000 bob. I'll be able to give you 1,000 bob right away if you do that. I'll be able to give you 1,000 bob if you do that right away. All right. Ile ya macho, Ronald lazima nikupatia macho. Sawa. Lakini Ronald, umesha share kweli? Are you able to see that live Facebook post? Are you able to see it? And have you shared? Because your mwalimu now wants to go international. Mwalimu wants to go international. Mwalimu would want to start earning in dollars. And we can only do that if mwalimu is supported by yourselves. I'm now tired of being a local champion. Now I would want to become an international champion. And I can only do that if my students help me. If you get to this and you get to share this thing 10 times, please let me know that you have finished. And then, of course, if M-Pesa is working, I think M-Pesa has a problem right now. If M-Pesa is working, then I should be able to give you 1,000 bob, regardless of whether you are a gentleman or a lady. That way, I will not discriminate. I'll not discriminate. I can see some ninja ananiambia hapo mwalimu napenda wasichana sana. I have daughters. I have a daughter. So nataka nisiwapende kwa nini? I have a mother. All right. Ushindwe kabisa. So then why are we here today? Today I would want to solve some question here, and I hope you guys have it. You have this in your past papers there. I hope in your past papers you have this question. This is the question that I would want us to do today. But when I look at my shares on Facebook, I can't see anybody who has shared anything. I would want us to look at April 2022, question number 2, boy. April 2022, question number 2, boy. April 2022, question number 2, boy. Let me know whether you guys have been able to see it. April 2022, question number 2, boy. April 2022, question number 2, boy. Once you get that question, please put your thumbs up like this. You can share in any forum, whether it's on WhatsApp or Facebook. All right. So long as you share 10 times. 10 times. But for now, I want to know whether my AFM students have been able to get this question. April 2022, question number 2, boy. I can see Philly Kangu, this lady with a good name. Kangu is a big name. Winnie, yes. So if you guys have been able to get it, are you able to share that question on our various WhatsApp groups? On our various WhatsApp groups, please share that question, because I'm so sure there are students, there are ninjas who are not able to get those questions for some reasons. They don't know how to get the link for some reasons. They don't know how to get the link for some reasons. So once we are able to share, all right, I would want to see again, don't get tired, thumbs up like this, thumbs up like this, thumbs up like this. So as I wait for these guys to confirm, I'm trying to add lighting in my studio, just to ensure that I'm able to give you guys the very best shots. Is my clarity improving with time? Is there anybody who has been following me over time? Clarity of my whiteboard, not of my face. Of course, I'm a very dark man, not handsome. So I'm talking about the whiteboard. The whiteboard. When you look at the whiteboard, are things improving? Are things improving? Are things improving? Are things improving in terms of clarity? I'm not yet there. I'm not yet there, but at least I want to believe. Not unless you guys have a different opinion. It's clear. Today is brighter. Oh, great. It's a brown board. We shall overcome. We shall overcome. So now, ladies and gentlemen, with us is this question, before I discuss why so many students fail in this AFM paper, and yet it is the easiest. So you're told there, April 2022, question number 2b, Albert Onchiri, a finance manager at WALIOLEMEWA Limited, is considering investing in shares of Safari Airways, a company quoted at the Securities Exchange. The returns on the Securities Exchange Index and the Safari Airways shares are shown below for the 5 possible states of the economy that might prevail next year. So I can see the probabilities being given there. I can see the market returns, and then I can see the Safari Airways return. So I'll copy this down. I'll copy this down. I will copy this down. I will copy this down. I will copy this down. So I can see in this case here, they have given me the market returns. So market returns have been provided. Market returns have been provided. So we have here 25. 25, we have 2015. 2015, we have 10. And then lastly, we have 4. And then we have returns of Safari Airways. So I'll call this one here returns of Safari RS in form of percentages. In form of percentages. So here they have given me 13. Here they have given me, ladies and gentlemen, 10. Here they have given me 8. They have given me 4. They have given 2 like that. And then, of course, we have the probabilities. These ones must be written. Probabilities by the side here. We have 0.15, 0.15. We have 0.35, 0.35. We have a 0.25, 0.25. We have 0.15, 0.15. And then lastly, we have 0.1 like that. And then, ladies and gentlemen, if you look at these returns of the market, these are the returns of the market. So these market returns, you can see they are fluctuating. They are different. Returns of the market are fluctuating. They are different. The same case here with the returns of Safari Airways. Different. And for our analysis, we would want to average them. Would want in this case here to have them being even. So in this case here, averaging means that the very first thing I have to do, even if I know nothing about the topic in question, I would want to calculate the expected returns, the mean returns. Just like the way they have asked us, ladies and gentlemen, in Roman 1, they want us to give them the expected return of Safari Airways shares. Actually, I'll end up giving them expected return for each of these shares, So, ladies and gentlemen, please listen. If, for example, you are given 3 people, the first one has a weight of 50, another one has a weight of 70, another one has a weight of 80. And then these guys want us to get the mean X bar. How will I be able to get the mean X bar? This is very easy. I'll simply get the total weight of the three guys, and then to average, I divide by the number of people in analysis here, under analysis here. So to get X bar, we shall talk of 50 plus 70 plus 80, and then I'll come and divide this by what? By 3. But you see here, I've been able to do this direct way of getting a mean because we don't have probabilities. What if in this case here we had this as X? And then of course, when you have this as X, then down here, you are given, for example, like what here? Like probabilities, like probabilities. You are given here, please don't write this, don't write this. We are given probabilities. So if they give us like 0.5 here, 0.3 here, and then 0.2 for these numbers, for me to get what we are calling the X bar, or expected returns, for me to get X bar, ladies and gentlemen, whenever you are given probabilities, and this is something that was taught to us in high school. One of these problems, which would always bring problems to AFM students, ladies and gentlemen, there are things that we are supposed to be knowing offhand. And unfortunately, we forgot about them a long time ago. And that is why as you come to this particular level, you will be expected to practice a lot. Because these things of mean, standard deviations, etc., they were taught to you in Form 4, Form 3. And again, of course, you were taught the same in quantitative analysis, which is again, for some of us, a long time ago. But you see, there is no worry, nothing to worry about, because the moment you are consistent, the moment you shall be watching these videos often, then these things will become part and parcel. So for example, in a probabilistic distribution, whenever they want us to give them X bar, what we do is to come and take the X values given. You take the X values given times their corresponding what year probabilities. Times their corresponding probabilities. Times their corresponding probabilities. Times their corresponding probabilities. And then what do? You'll come and sum them like that. So anytime you see a probabilistic distribution, and then these guys want you to provide what we are calling X bar, the mean, you simply do what we call tata, you multiply. You take X values times their corresponding what year probabilities, and then you sum them. So like in this particular case, X, the first X value is 50. So its corresponding probability is 0.5. Or means plus. So I take this other one here, 70 times 0.3 plus 80 times 0.2, like that. So I don't want you to write this at all. What these guys want me to do is to come and ascertain the expected returns of Safari Airways. This S is Safari. So they want me to come and give them expected returns of Safari. So expected returns of Safari, I shall call this one here ERS, E for expected returns of S. And you can see these are the actual returns and the probabilities are given here. So is there anybody who can do this thing of tata plus tata, and then you give me the expected return of S? Is there anybody who can do that? Don't forget, we are promoting Mwalimu by going to his Facebook page, Joshua Aura ACCA Mentor, and then you'll be able to see this live cast. Down there, you'll be able to see share, right? Even if you just share it on your wall and say, this is my Mwalimu. Share it on various WhatsApp groups. Share it on various Facebook groups, like the accountants groups. Tell them to follow Mwalimu. That really will be a big boost on my career. I'm also not very old. I'm also pursuing a career, right? I would want growth. I would want in this teaching profession to be at the pinnacle, to be at the top, because this market can only reward what here? The guys at the top. The guys at the top. But now, Mwalimu, how do you expect me to go to Facebook? And here we are live. I'm 100% sure if you want to help your Mwalimu, you will be able to help your Mwalimu. Going to Facebook is just 1 minute. It's just 1 minute, and then you get to share. You get to share live. You get to share live there. All right. So, ladies and gentlemen, we are getting expected returns of Safari Airways. So in this case, here it is Tata. So you'll come and talk of 13 times 0.15. 13 times 0.15 plus the second one for Safari is 10. So 10 times 0.35 plus 8 times 0.25 plus 4 times 0.15 plus 2 times 0.1. So is there somebody who is able to give me this figure? So they're giving me an answer of 8.5. Somebody is telling me 8.2. So I don't know who to trust. But I can see Joseph has changed there, 8.25. And please, caution, don't take a back bench in Zoom. Back bench means what here? You are seated just there. I mean, yawning, not interested at all with what you are doing. When others are punching the calculator, you are eating ugali with a sour milk. All right, let's take back bench. Here we would want a bench sitter who is there, ladies and gentlemen, participating. You have to give us numbers. You must give us numbers. You must give us numbers. You must give us numbers. Yvonne is saying eating. 8.25. You must give us numbers. Thanks, Ronald. He has already shared. Thank you very much. 8.25. Thank you very much. They never asked us to do this, but I know for the sake of the subsequent questions, I would want this metric. I would want someone to come and give me expected returns of the market. Expected returns of the market. I can see, of course, these are the fluctuating returns. So you take them times what here times their corresponding probabilities. So what do we have here? 25, 25, 25 times 0.15 plus 20 times 0.35 plus 15 times 0.25 plus 10 times 0.15 plus 4 times 0.1. So is there anybody who is able to give me this answer very first? Anybody who is able to give me this answer very fast? I can lift this up a little bit for you guys to see. Expected returns of the market was not asked by the examiner, but I know that I will need it somewhere. I know that I will need this somewhere. I know that I'll need this somewhere. I know that I'll need this somewhere. Is there anybody who is able to give me this expected return? Expected return of the market. Expected return of the market. Expected return of the market. Remember, I'm going to give presents. 16.4. Somebody is giving me a figure of 16.4 like that. So this is so interesting. This is so important for me and, of course, for you. For me and for you. Now, ladies and gentlemen, please listen and listen to me very well. Even without being asked, I know one thing is for sure. If you remember your measures of dispersion, measures of central tendency, measures of skewness, and the measures of kurtosis, if you can remember those things, once you have been able to come up with a measure of spread, or rather a measure of a central tendency, which is the mean, the next thing these guys will ask you is a standard deviation. Even if I haven't yet read the question, I know for sure that having gotten the mean, the measure of a central tendency here, the next thing is for us to calculate a deviation figure, the disparity, measures of disparity. So under measures of disparity, of course, I'm expected to know how to calculate standard deviation and the covariances. Standard deviations and the covariances. At this juncture, I would want to pause and listen to you guys. Listen to you guys. I would want to see whether there is any student who is able to remember how do we get standard deviation. How do we get standard deviation? I would want us to start with computing the standard deviation of the market. Standard deviation of the market. Let's get the standard deviation. Remember standard deviation, you write a 0 and then you pull the tail. You write a 0 and then you pull the tail. Please, my good students, professionals, colleagues in this industry, we don't write standard deviation like this. Look at this. This can't be the symbol for standard deviation. This is a mitochondrion in biology. For us here as professionals, ladies and gentlemen, we shall be writing standard deviation like this 0 and then we pull just a small tail. A small tail. A small tail. I hope nobody, when I'll be marking your scripts anywhere, I hope I'll never get anybody writing standard deviation like this. If you write standard deviation like that, then you have a bigger problem than you can imagine. So in this case, then to be able to get the standard deviation of the market, how do I get standard deviation? Standard deviation of the market. To get standard deviation of the market, deviation means subtraction. So it means that I come and take actual returns of the market minus expected returns of the market. RM minus ERM. RM minus ERM. But now remember that these things, these deviation subtractions, they must be squared. There are risk factors here. We must come and multiply them with their corresponding what here probabilities. Probabilities. And remember, ladies and gentlemen, that there are normally many, like now here, there are many. So you must sum. It cannot be called a standard deviation if it doesn't have a square root. So at the end of the day, it has to culminate at a square root being put at the top there, a square root being put at the top there, a square root being put at the top there. I hope this doesn't confuse you. This is independent like that. So anytime they talk about standard deviation, remember standard deviation from high school, we used to say that standard deviation is root mean square, root mean square, root mean square. But you know, so many things have really changed in high school. So many things. During our times, we used to study nice things. During those old days, 1996, 1997, when I cleared my high school, we used to study things like LCM. Nowadays, they're no longer there. Because like, for example, us, we used to say 2 over 3 plus, for example, 4 over 5. What we used to do is to come and say we have an LCM. LCM of this and this is 15. Great stuff. 15. 15. Great stuff. LCM there is 15. Right? Great stuff. LCM here is 15. Great stuff. And then we used to say, you know what? This 3 goes into this how many times? 5 times. 5 times 2 is 10. Plus 5 goes into here thrice times 4, that is 12. And then you used to get an answer beautiful as what here somebody? 22 over 15. But nowadays, to get this, it's an improper fraction. To get this, either they use a calculator or they use some funny methods. Things have really changed. So they'll tell you 2 times 5, 10. Plus in this case here, 3 times 4, 12. All over 3 times 5, 15. You see, they'll end up getting, the same answer because it'll be 22 or 15. Same answer, but theirs is really this instant thing like coffee, instant coffee, etc. Better, but like when we were in high school, they used to tell us that standard deviation is root mean square. Root mean square. So what does that mean? That first of all, when you talk of standard deviation, deviation means subtraction. You must come and take our RM, actual returns of the market, minus expected returns of the market. That deviation from the mean. And then this deviation here from root mean square, we start with this. We square first. For averaging mean means you multiply with probability. And then you sum. And then at the end of the day, there must be what we call a square root. Root mean square. Root mean square. Listen, ladies and gentlemen. I would want to repeat this severally. 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 So if I go to an exam and then I realize that this examiner wants me to get standard deviation of Safari, standard deviation of Safari, is there somebody who can try writing down this formula? Standard deviation of Safari, is there somebody who can try writing down this formula? Standard deviation of Safari, is there anybody who is able to try putting this formula down? Even if you don't get it, so what? So long as you try. The thing is about trying. The thing is about trying. Yes, you can leave, yes. Please go to the taxation class. Taxation class. Thank you very much. That is very courteous of you. That's the first time getting somebody asking for permission from my class. My very first time since I started teaching Zoom. I would want to take note of that name of that student. Maninja wengine hapa hawezi wakaomba ruhusa hivyo. Wanaenda tu. All right. Standard deviation of Safari. Standard deviation of Safari. Standard deviation of Safari. Standard deviation of Safari. standard deviation of Safari shares. You know, you can't talk of, for example, RS minus ERM. No, this is purely an RS thing. So if it is standard deviation of Safari, this is what I shall do. I will not start with the square root. I will start with what we have inside bracket, the standard deviation. So I'll come and talk about RS minus ERS, like that. And then, ladies and gentlemen, I should be able to come and square. So I'm following now this. Mean means that I come and multiply this with probability. And because there are many, so I must talk about summation there. And then at the end of the day, I must come and talk about what their square root. Square root like that. Square root. Square root. Square root. All right. So again, I'm repeating. So because I would want us to start with the standard deviation of the market. So if they want me to give them standard deviation of the market, ladies and gentlemen, standard deviation of the market, ladies and gentlemen, I'll always begin with what here? I'll always begin with returns of the market minus expected returns of the market. We square this times probability, we sum, and then at the end of the day, there is a square root there. So then I would want us to organize this nicely. So we have the returns of the market here, they're here. They're here, we write them downwards. So we have 25, we have 20, we have 15, we have 10, we have 4. We say minus, 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 minus. Is there somebody who can remind us what we had obtained as ERM? Is there anybody who can remind us what we had obtained as ERM? What we had obtained as ERM? Is there anybody who can remind us what we had obtained as ERM? Not ERS, but ERM. ERM, it was 16.4. And what do you know about this 16.4 ERM? It doesn't keep on fluctuating. It will remain the same. It will remain the same throughout. It will remain the same throughout. It will remain the same throughout. ERM doesn't keep on dancing. No, it remains the same throughout. It remains the same throughout. So squared, squared, squared like that. Times here, probabilities. So 0.15, 0.35, we have 0.25, we have 0.15, and then we have 0.1. So I would want you guys to be very, very nice to me and to give me these figures. Please be very nice to me and give me these figures here. Be very nice to me and give me these figures. All of us must provide these figures. So you say open brackets, 25 minus 16.4. You close, you square, whatever you get, you say times 0.15, and then you give me the first answer. Every student must participate. Every student in Zoom is a front bencher, 11.094. 11.094. So please go to the second one. What are we doing here? It is brackets here, 20 minus 16.4. You close. Remember to square. There is a squaring button there. Times 0.35. Then you give me an answer. Times 0.35. Then you give me an answer. Times 0.35. Then you give me an answer. What do we have there? It is 4.536. It is 4.536. And then you go to the second one. The third one, I mean. The third one. So the third one, what do we have here? The third one. So you open brackets, 15 minus 16.4, you close, you square times 0.25 times 4.25. The third one. I mean, I'm not getting these answers from very many students. And I would really have wished to get these answers from so many students. From so many students. From so many students. I would have wished to get these answers from so many students. I mean, all the students in my class must speak. So they're telling me it is 0.49. 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 0.49. They're guys, they're ninjas. I have never seen them speaking to me. In terms of giving me answers, I don't know where they don't have calculators. Perhaps I need to start a scheme where I buy my students calculators because some of them could be suffering. 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 So Alpha, thank you very much. At least Alpha, you've come live, 6.144. So this is 6.1444 like that. And then now we have the last one. The last one, what do we have here? The last one, 15.376. Aren, thank you very much. 15.376. Now, ladies and gentlemen, if you're following my formula here, we've been able to get this section, squared probability. All right. But you see, there is this summation before I take the square root. That is why you can't come and start getting square root of each number. No, the square root comes after you have summed. This means summation. This means summation. So come here and sum up everything. Come here and sum up everything. Come here and sum up everything. And then you tell me what are we able to get there. So somebody already has gotten 37.64. 37.64. 37.64. 37.64. So then if that is the case, as a good, bright student, I should be able to come and give you standard deviation of the market as the square root of this 37.64, like that. So is there somebody who is able to give me the standard deviation of the market? Winnie is giving me 6.135. Winnie is giving me 6.135. You guys are geniuses. The good thing is that RCM, I normally get very good students. Brilliant. 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 All right. So up to here, are we together? Are we together up to here? Remember, ladies and gentlemen, for those of you that have never taught before, my name is Dr. Joshua Aura. I teach at RCM Online College through Zoom. AFM, BDA, AFR, early morning, ETC, and many other papers, as well also in the lower levels. And we charge 4,800 Kenyan shillings, 4,800 per paper for these videos, for notes, for Zoom classes, 4,800. If you're interested, of course, in becoming a student with us, that is very good of you. Please call us, not tomorrow, today, 0793 555 000. 0793 555 000. This is our number, an easy number, 0793 555 000. All right, so they're telling me, Mwalimu, we are together. I can see there, yes, 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 we are together. Now then, can you kindly do me a favor? I would want to see whether there is any student who will be able to give me the standard deviation of S, Safari shares. Standard deviation of S, Safari shares. Is there anybody who will be able to give me the standard deviation of S, Safari shares? Now that I've taught you guys how to write the formula, standard deviation of S, Safari shares, I will never forget this formula because it is a high school formula. It is a high school formula. Standard deviation of S. Standard deviation of S. It's a high school formula. Already I can see Winnie has it. And there is also somebody else who got it up there. Guys are bright here. Guys are bright here, I'm telling you. Guys are bright here. There is somebody that Shady got 3.33. Winnie has gotten 3.62. So I can see a conflict of ideas there. So they expect out of this conflict of ideology to get like answers from 3 or 4 students yet to be able to confirm between the two whose idea is correct. Standard deviation of S. Jeremy is saying 3.333. Jeremy is confirming someone's value up there, 3.333. So now I'm waiting for one more to confirm. I'm waiting for one more to confirm. I'm waiting for one more to confirm who is correct. And as I wait, it's not lost to me that for us to be able to get the standard deviation of S, it is standard deviation. We're subtracting 2 returns. So we have here returns of S minus expected returns of S. And then we talk of square times probability. And then, of course, in this case, here, there must be summation. And then at the end of the day, there is what here? So don't forget that this is a summation like that. So returns of S, what do we have here? Returns of S, we have 13, we have 10, we have 8, we have 4, we have 2, minus, 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 minus. Is there somebody who can remind us what the expected return of S was? Anybody who is able to remind us what the expected return of S was? Wait, they're not talking to me. Somebody is confirming that it was 8.25. 8.25, 8.25, 8.25, 8.25. So in this case here, come here pretty first and do what here? Somebody you square this as per the rule of standard deviations. So come here and multiply this with the probabilities, these same probabilities. So we have here 0.15, we have 0.35, we have 0.25, we have 0.15, we have 0.1 like that. And then now you should be able to give us these answers very fast. You can see I haven't even told you which topic this thing is coming from. I'm only using the general knowledge that we got from high school to tackle some sensitive areas in AFM. So is there somebody who is able to give us, ladies and gentlemen? Is there somebody who is able to give us, ladies and gentlemen? Is there anybody who is able to give us, ladies and gentlemen? Is there anybody who is able to give us these numbers here pretty fast? Is there anybody who is able to give us these numbers here pretty fast? Pretty fast, pretty fast, pretty fast. Or do you want me to write the final answer? Do you want me to write the final answer like standard deviation of S is 3.3 something? 3.384. How about the second one? How about the second one? How about the second one? 1.072. I like that like that. 1.072. And then we have the third one. Then we have the third one. The third one, the third one, 0.016, 0.016, 0.016. And then we have the fourth one. We have the fourth one. Thanks, Kangu. 2.709, 2.709, 2.709, 2.709. And then we have the last one, 3.906, 3.906. And then, ladies and gentlemen, after being able to do this, they want us to come and sum. So you sum here. So as you sum here, what do we have there? As you sum there, what do we have there? Alpha is giving me 11.0875, 11.0875. And then this summation, of course, is what we call the variance. So should they want us to give them standard deviation of S, we shall come and take the square root of the 11.0875, like that. Which will end up giving me 3 point something, isn't it? Like alpha is giving me there 3.33, like that. The standard deviation of S is 3.33. So for the last bit of this class, of course, before I come, I would want to do this question tomorrow. But today I would want to end it at this point where I teach you guys how to compute the coefficient of variation. How do we compute the coefficient of what here? Variation. How do we get the coefficient of who? Variation, CV. So anytime, and sorry, here I'm talking about gender, male, female. Anytime they talk about coefficient of variation, I would always remember that CV is sex in percentage. CV is sex in percentage. I'll never forget that. And I know you guys will never forget that. CV is sex in percentage. Sex in percentage. And this is what we normally do to remember it. That CV is S over X bar times 100. Once I remember this, I will never ever forget how to calculate this CV. S over X bar. And remember, S is standard deviation. X bar is the expected returns. So in short, for example, if they want me to give them CV of the market. So basically, I'll take the standard deviation of the market all over ERM times 100. Very important, times 100. Very important. So is there somebody who can remind us what the standard deviation of the market was? Anybody who is able to remind us what the standard deviation of the market was? So if you guys are great enough and you're willing to support Mwalimu in his project set to become very popular in East Africa, please this video on Facebook, even after the class ends, you must pick that video and give it to whoever who is doing advanced financial management, to whoever who is doing financial management, and tell them to watch the video to the end. And then they give you feedback about my teaching style, invite them to the school to come and study with us. We must be the most popular college in East Africa. We must be the most popular college. So this is 6.135. So this is 6.135 all over what here? Somebody expected returns of the market. Expected returns of the market. So expected returns of the market, are you able to remember expected returns of the market? Please remind Mwalimu here. Expected returns of the market is 16.4 times 100 times 100. So are you able to give me, ladies and gentlemen, the CV of the market? CV of the market. So according to Sylvia, CV of the market is 37%, 37.4%, 37%, one and the same. Thank you very much. How about CV of S? 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 CV of S, the same. You take the standard deviation of S, the standard deviation of S, this divided by expected returns of S, standard deviation of S divided by expected returns of S. So what was the standard deviation of S? Is there somebody who can remind us the standard deviation of S? Is there anybody who is able to remind us the standard deviation of S? These guys are not talking to me. These guys are not talking to me. 3.33, 3.33 divided by, how about expected returns of S? How about expected returns of S? 8.25, 8.25, 8.25 times 100, times 100. So when you multiply in this case here, what percentage are we getting here? 40.36. So between the two, which one is more risky than the other? Because remember, CV is a measure of risk. CV is a measure of risk. And to get this CV, we are looking at CV as sex in percentage. The person who taught me this told me that the higher the sex, the higher the risk. I don't know which risk. I don't know which risk, but the more the risk, I think risk of even death or something, isn't it? So in this case here, S is more riskier because it has got what here? A higher CV. It has a higher CV. So are we together up to there? Are we together up to there? Are we together up to here, really, guys? Are we together? Are we together? Are we together, guys? Are we communicating, really? Are we communicating? Guys are not even responding here now. They are not responding. So, ladies and gentlemen, this was supposed to be a brief marketing class, and I would want to take this opportunity to make an announcement that really we have come to the end of this session, and given that it was a marketing activity, please welcome and join all of us in this online bandwagon. I would want to invite any student who is outside there to come and join us in the online bandwagon. Let's study online. The accountancy role at the workplace is changing very fast. You'll be surprised in the next 10 years from today, all accountants will be working remotely from home. Like myself, I work for a Swedish organization where we serve about 140 countries globally. And I rarely get out of my sitting room. I'm doing, in this case here, everything from home. COVID taught us that, yes, you can do things from home. So the more you study online, the more you get some of these teleconferencing skills, for example. Like you'll be able to know how to share your screen. You'll be able to know when to shut down your microphone. You can see up to date. So many guys have never even known how to shut microphone when they come to Zoom. I always keep on muting them. Why? It's because in this case here now, this is the time most guys are coming online. It's not Johnny who is walking in too late, but the most important thing is that we have to embrace this online learning. Learning has really, really shifted. If you give me, ladies and gentlemen, just 1 minute, I will be able to, I need a screenshot or take a screenshot so that you can, how much is the online class? We are charging 4,800, 4,800 only for videos, for Zoom classes, and for notes, 4,800. But don't tell me, what if Mwalimu, I want videos alone? I just want to show you something here, very, very sensitive here. For you to know why Mwalimu, despite Mwalimu having a physical college at Stanbank House, RCM Stanbank House is our subsidiary. Why would Mwalimu want all of you in this case here to study online and not go to physical colleges here? Why? Why would Mwalimu want all the students here to study online? Yes. So in this case, I'll be able to share this. All right. Now, ladies and gentlemen, in this case here, you can see some wheel. A wheel which is talking about sustainable organizations. That in the future, those companies that will be sustainable, that will be able to outlive us, whose business model will not be stale, are those companies that will be run by very, very qualified, ethical, tech-savvy accountants. And you can see in this case here, under sustainable organizations, they're giving us very many things. For example, they're telling us that an accountant will be able to run a company in the future that will be able to defeat, that will be able to, in this case here, get out of out of competition and enter what we call the blue ocean area. Will be those accountants whose emotional intelligence is very high. We must be emotionally intelligent. This thing of, for example, you are a lady, even man. I mean, you are working there in your company as a CFO. As I say, a CFO, you expect people to throw very many stones your way. Good stones, bad stones. And you are expected to catch all of them. You must have a very thick skin. If, for example, you are that kind of a lady CFO, where, for example, some other two ladies just gossip you a little bit and say, I mean, how is this lady now dressed? And then you begrudge those people forever, that you can never talk to them. No. Our emotional intelligence quotient must be very high if we want to run companies successfully, or rather, also apart from that, apart from emotional intelligence, what else are we expected to have to be able to run these companies in 2030 profitably, sustainably? We need so many things. I really pity the modern accountant, but of course the market will be able to pay you very well. You can see, ladies and gentlemen, in this case here, you are expected to do what here? You are expected here to have experience. And that is why I wonder, so many students are coming to the advanced level. And at the advanced level, I mean, they're not even looking for anywhere to volunteer. And of course, discharge whatever skills we've been able to give them here. Like myself, I run Aura and company, certified public accountant, CPA firm. I've never gotten even a single student of mine while telling me, Mwalimu, I would want to be coming over here to volunteer. The few that I get, they come over there, and of course, the place is quite full. So they'll come and tell you, Mwalimu, I would want to come and do. The next question, as you discuss with them further, is how much will you pay me? All right. We are required here to be experienced in all round matters of what here, finance, taxation, etc. Very, very important. We must be experienced. And then, ladies and gentlemen, we must be very visionary. As an accountant, you can't tell me that COVID-19 was able to crash you as a company. No, we must be very visionary. We must be transformational leaders. Because remember, when you are a CFO, you are in the C-suite. You are sitting together with the CEO, you are sitting together with the COO, and even top management, top management directors, etc. Then you must be visionary. You must be among those people who support diversification in the company. Ladies and gentlemen, it's quite sad that you will get companies that have got great accountants. And these great accountants, they are only telling their companies that whenever you get surpluses, just keep on buying land. They don't even know that as a company, what is the king is liquidity. As a CFO, if you want to have a company run sustainably, to be able to outlive ourselves in the future, you must protect cash flows. So if you have directors who are coming there, for example, like they come into a board meeting, like 30 minutes, and they want to pay themselves 30,000 board allowances, even if yourself, you're also a beneficiary, I mean, always look at ways of cutting costs. And you must be able to explain to people very well. I've told you, you must be emotionally strong. Without emotions here, you must come and tell people, you know what, it's not about, I mean, we want to eat this thing in the long term. If you're 10 of us and every sitting you're taking 300,000, is that rational? Would want in this case here to protect what here our company's cash flows, because it doesn't matter how big you are. If, ladies and gentlemen, in this case here you are illiquid, then automatically, this reminds me of some cartoon I was watching. Now this cartoon, we are two men, I hope I can explain this thing very well. So one of the men was huge, huge than me. And in this case here, he was tacked with lots of money, lots of money, of money across, all round, like that. And the guy was too huge, perhaps 200 kilograms plus. And then, of course, he was always saying that I always sell my things for cash, for cash. And then there was one thin, very thin man, maybe 30 kilograms or something, with no money surrounding him. And then he was mentioning every time that, you know what, I sell my goods on credit. So a good CFO, ladies and gentlemen, in being visionary, you must be able to evaluate the credit policies. You should never let, in this case, your money belong to the company disappear. All right? I mean, you must always strive. If it's the credit department, I mean, empower them. Let these guys go for people outside there. All right? Make arrangements, negotiate with your customers, negotiate with your suppliers here. Right? Because at the end of the day, liquidity is a king. And whenever you get, for example, surplus money, do you let your money just lie like that in the bank where you'll not be given any returns? No. There are monies that I have to take the money, to the money market fund. There are monies I must take in this case to government long-term bonds, treasury bills. And there are monies, of course, that I'll have to take in this case here, for example, to properties like land, buy like buildings like that. But don't buy buildings throughout. Like, you can't convince me that there is any good reason why, for example, a SACCO should have a building in an office in town. No. Let's believe in leasing. Let's believe in leasing, because much of your capital, you'd want much of your capital to be in liquid assets. That will be able to outlive yourselves. You'll be able to run the company sustainably. I'm not saying that you fear properties. Get them, but cautiously. Slowly. Because in this case here, for you to run a company in the long term, you must be visionary. Now I'm almost finishing here. Mary Washira, you can pay in installments. The 4,800, you can pay it in installments. You can pay it in installments. So come, ladies and gentlemen, in this case here, the accountant must be digital. Digital means what? You study digitally. Digital means what? Yeah, learning this SAPs, etc. Intelligence, you must be technical and what here? Ethical. Look at these three things here. Career adaptation. And that is why, for the students that I'm mentoring, the ones who come to my offices, even after you clear, for example, your CPA, I'll tell you, for example, do ACCA because of the many exemptions. And then after that, to adapt your career very well, I always recommend the IT from KC University. You just go and do their diploma in IT or even certificate in IT, because an accountant who doesn't have a very strong IT background doesn't augur very well in the market. So career adaptation. And then you can see, ladies and gentlemen, here we have skills transformation. You must transform your skills. Like, if you get an accountant who does not know Excel very well, then you'll always have what here issues. You must know the Power BI, skills transformation. You can't continue doing your stuff manually. There are things you must automate. You must be able to know how to run what we call the macros. Etc. And remember, I'm not giving you Jabba stories here. I'm giving you stories that I have been able to live through them. As I've told you, I work for a multinational company, huge company, all right? As my colleagues in this case here keep on complaining that CPA is very bad, etc. Here I am. I'm paid for the top golf clubs in this country, all right? I'm a member of, for example, the Capital Club, where I'm paid for by my employer, $1 million shillings every year, all right? So CPA is not a bad thing. What matters most is how you are able, all right, to transform yourself, how you are able to, upskill, get, in this case here, extra skills that employers would, be willing to do what to stay with you throughout. All right. Once you acquire skills like the ones that I have, trust you me, like I was to change my job this particular month of February, but now my old employer has told me, no, you cannot go. Come, we talk. Why? Because of what here? Skills. Many guys are blaming CPA, but trust me, CPA is not the problem. CPA gives you so much, but there are things that people do not take, in this case here, so seriously. And that is why we are here as mentors. And as I teach you guys AFM, AFR, and other things, I'll always ensure that I mentor you through these things so that you can succeed. So I'll stop there. If you guys are willing to talk to our receptionist here, and of course inquire about our CPA course, this is it, 0793 555 0000. All right, there is something small that I never showed you here. Something small that I never showed you guys here. Look at this, learning evolution. Learning evolution. Learning has evolved. You can't continue studying from these brick and mortar classrooms and expect things to be the same. Learning has evolved. We must, in this case here, get into digital solutions. Digital solutions for us to be able to do what here? Remember, even when I was going to Stanbank, I told my people very well, of course, I'm an investor here, but never ever expect me to come and teach classes here physically. Never. Because now me, I'm a Zoom teacher. And I always talk about what here positively about Zoom. And it's because of the transformation I've seen these kind of things doing what here. I mean, like now here, if people are to be very honest, and this is a question I've asked severally, there must be somebody here who has a 3-month-old kid, 3-month-old baby. True or false? Is there somebody who has got a very young kid here? Is there somebody who has got a very young kid here? Could you kindly talk to me? Is there anybody who has a very young kid here? Could you kindly talk to me? Could you kindly talk to me? Anybody with a very young kid here, kindly talk to me. You'll be surprised. Not one, not twice. I mean, these online classes are classes that give students a lot of possibilities. You are able to study from wherever. If you get somebody who's saying that I can't continue with my CPS simply because there is no college around here, they are deceiving themselves. We are able to bring to you a whole world-class classroom to your living room, So it's just upon you to wake up and seize these opportunities. You'll be surprised. I mean, Zoom is a big thing. It's a big thing. So that is it, ladies and gentlemen. And I would want to take this opportunity to really thank all of you. I normally call you at a very short notice and you don't disappoint. You come in droves here. So thank you very much. I look forward again to meeting you guys, like the AFM early morning class tomorrow at 5 a.m. Bye-bye for now. Bye. And then there is Winnie. There is this guy that I promised something, right? I hope now M-Pesa is working. Winnie, if you don't mind, just get to my WhatsApp and send me your number. Thank you. Bye.